Hello everyone. So now we are going to discuss about how to analyze transactions using the debit and credit procedure. So again, this is part of a series of accounting principle tutorial videos intended to those who are taking basic accounting courses or to those who just would like to learn about basic accounting principles. So I have posted the links in the description so that you can follow the topics that I discussed. So we will be dealing with examples and the same transactions that I used in transaction analysis, but this time let's have a little twist or another twist, and let's add into our analysis on how are we going to apply the increase and decrease in terms of debit and credit procedure. So for this first transaction, remember that the owner invests into the business. She puts cash, 15,000. So the business is named SoftBite. So again, what are the accounts affected here? We have cash and capital, remember? And both increase, right? Remember on our previous video. You can follow the link in the description. And in the third question, let's have a twist and let's ask this time, what are we going to do with increase in cash and what are we going to do with increase in capital? So applying the rules of debit and credit. So take note that cash is an asset, right? So increase in asset is recorded in debit. So we have an answer already for cash. How about capital? So capital, increase in capital, letter C, is recorded in credit. So therefore, what are we going to do here? We have to debit cash and credit capital. Get it? So let's look at the T account. So if we have a T account for cash, we have to record that increase in cash in the debit side. And if we have a T account for capital, you have to record that in credit side. And I posted below the normal balances of that account so that you can follow. Am I right? Okay. Now let's proceed with the second example. So here, the business purchased computer paper and other supplies. And the business paid 1,600, right? But, okay. So in this example, the business purchased computer paper and other supplies, collectively known as supplies, but the business did not pay immediately. Instead, the business postponed the payment to a later date. So meaning we have supplies account and accounts payable, right? Okay. So what are we going to do with the supplies and accounts payable? Remember that your supplies increased. The same with your accounts payable increased. Let's apply the rules for debit and credit. So increase in supplies. Supplies is an asset, right? So increase in an asset is recorded in debit. So therefore you record debit supplies. So the other account, accounts payable, should be credited. So you have to credit accounts payable. So let's look at that in a T account. So you have a T account for supplies and you have a T account for accounts payable. And you have recorded that in debit and in credit respectively. So I have posted again the normal balances so that you can follow that all the increase in assets are recorded in debit and all the increase in liabilities are recorded in credit. Okay, third example, in this transaction, the business receives 1,200 cash from the customers for programming services it has provided. So again, what are the accounts affected here? We have cash and service revenue, right? So the business receives cash. Why? Because the business rendered service and in return, it receives service revenue. So what happened to your cash? Once again, you receive cash, so your cash increased. And for your service revenue account, that also increased. Why? Because remember that revenue increases owner's equity. So we have increase here. Now let's apply the rules for debit and credit. So what happened if our asset increase? So we have to record that in debit. So we have to debit cash, and therefore we have to credit service revenue. So look at that in this T account. So we have a T account for cash, which is recorded in debit for that amount received, and increased in revenue is recorded in credit. And you can see that here, increase credit, increase in asset debit. Now let's proceed to our fourth example. SoftBite receives a bill for $250 from Daily News for advertising the opening of its business, but postpones payment of the bill until a later date. So it receives a bill, meaning the business has an accounts payable, right? And that is because of advertising their business, so they should pay advertising expense. So we have accounts payable and advertising expense. Now what happens to your accounts payable? Since you are being billed, it increase. And how about for your advertising expense? Remember that this is an equity account, and expenses increases owner's equity. So therefore, both accounts payable and advertising expense increased. So let's apply the rules for debit and credit. So accounts payable is a liability account. Take note. So what do we do with the increase in liability? So therefore, we have to credit accounts payable. So we have credit accounts payable, and the other one we have to debit advertising expense. Let me show you that in a T account. So you have a T account for accounts payable, and also we have a T account for advertising expense. And take note that your accounts payable is a liability. It increased, so we recorded in credit. That's why credit. And expense account is and all the increase in expense account is recorded in debit. So that is for our fourth example. Now in my fifth example, let me jump to transaction number 10, wherein Angel Oxin withdraws 1,300 in cash from the business for his personal use. So that should be her. So what are the accounts affected here? We have cash, and since Angel Oxin withdraw, so meaning you have account drawings. So what happened to your cash? It decreased. While for your drawings, remember that drawings increases owner's equity. So we have to record increase. Now applying the rules for debit and credit, what are we going to do with decrease in cash? So before, our examples are more on increase in cash. So now using the normal balance idea, the normal balance for cash is debit. So when a decrease happens, you should record that in credit. So you have to credit cash, and for the other account, you have to debit drawings. If you are still confused, you can always look at the normal balance of the T account. So you have an account for cash, which is an asset, and all the increase in assets are recorded in debit, right? But in our example, our asset decreased. So that is why we recorded it in credit. Now, for drawings account, take note that our drawings increase. So here, your normal balance is debit. That's why you recorded here in debit. On the next video, I will show you how to make use of this debit and credit analysis in a process called journalizing.